The rise of banking and double-entry bookkeeping. The Renaissance period saw significant developments in economic thought and practice, including the rise of sophisticated banking systems and the invention of double-entry bookkeeping. These innovations were pivotal in shaping modern economic systems, facilitating global trade, and supporting the rise of capitalism. 1. The economic environment of the Renaissance. Several factors during the Renaissance created fertile ground for economic innovations, such as banking and bookkeeping, growth of commerce with the decline of feudalism and the rise of cities. Trade networks expanded across Europe and beyond. Italian city-states such as Florence, Venice, and Genoa became centers of commercial activity, while northern cities like Antwerp and Amsterdam also emerged as key trading hubs. Merchant class and global trade. A new class of wealthy merchants began to dominate the economy, driven by trade across the Mediterranean, Europe, and later, the Atlantic. These merchants needed access to capital, credit, and secure ways to transfer funds to support the growing complexity of international trade. State finance and warfare. European rulers, particularly in the emerging nation-states, increasingly relied on loans to fund wars and expansion efforts, furthering the need for robust banking institutions. 2. The rise of banking. Banking evolved significantly during the Renaissance, with the Italian city-states leading the way in Europe, while rudimentary forms of banking existed in earlier periods. The Renaissance era saw the development of full-fledged banking institutions that provided various services to merchants, governments, and individuals. Florence and the Medici Bank. Florence was the heart of the Renaissance banking revolution, and the Medici family became one of the most powerful banking dynasties in Europe. The Medici Bank, founded by Giovanni de' Bicci de' Medici in 1397, played a crucial role in the growth of Florentine commerce. The bank expanded throughout Europe, with branches in Rome, Venice, London, and Bruges, becoming the largest and most influential bank of the time. Key services provided by Renaissance banks like the Medici Bank included currency exchange, since there was no standardized currency across Europe. Money changers facilitated trade by exchanging one currency for another. Banks provided a safer and more reliable method for these exchanges. Loans and credit. Banks offered loans to merchants, kings, and popes. The Medici Bank, for example, managed the papal accounts and provided credit to various monarchs across Europe. By extending credit, banks allowed merchants to finance large trade expeditions and governments to fund wars and projects. Deposits. Banks accepted deposits from clients, offering a secure place to store wealth. These deposits allowed the bank to lend out money and earn interest on the loans. Letters of credit. To facilitate international trade, banks issued letters of credit, which allowed merchants to conduct business in foreign countries without carrying large sums of money. This method reduced the risks associated with long-distance trade. Venice, Genoa, and beyond. Other Italian city-states, such as Venice and Genoa, also became important centers of banking. Venice's economy was closely tied to maritime trade, and its bankers played a central role in financing voyages and managing the city-state's international commerce. Genoa's banks were heavily involved in state finance, lending large sums to monarchs, including the Spanish crown. In northern Europe, Antwerp became a major financial center in the 16th century, hosting what is considered one of the first modern stock exchanges. Banks there provided short-term loans to merchants and financiers, helping to fuel the burgeoning trade of the time. The Fugger banking dynasty. In the 16th century, the Fugger family of Germany became one of the most powerful banking families in Europe. Jacob Fugger, known as Jacob Fugger the Rich, expanded the family's fortune through mining, trade, and banking. The Fuggers lent vast sums of money to European monarchs, including Emperor Charles I, and financed numerous ventures, including the mining of silver and copper. The Fugger family introduced several financial innovations, such as complex loan agreements, mining contracts, and partnerships with monarchs to exploit natural resources. Their financial influence extended across Europe, making them key players in politics and economics. 3. Double entry bookkeeping, a financial revolution. One of the most important innovations during the Renaissance was the development of double entry bookkeeping, which revolutionized accounting and financial management. Luca Pacioli and the birth of double entry bookkeeping. The system of double entry bookkeeping is often credited to the Italian mathematician and friar Luca Pacioli, who published the first known description of it in his book Summa di Arithmetica, Geometria Proportioni et Proportionalit in 1494. Pacioli did not invent the system, but rather formalize and documented a practice that had already been used by Venetian merchants for several decades. Double entry bookkeeping was revolutionary because it allowed merchants and bankers to keep more accurate and transparent financial records. The system operates on the principle that every transaction has two sides, a debit and a credit. For every transaction recorded in one account, an equal and opposite entry must be recorded in another account to keep the books balanced. How double entry bookkeeping works. The double entry system relies on a ledger with two columns. Debits recorded on the left-hand side of the ledger, and typically represent increases in assets or decreases in liabilities. Credits recorded on the right-hand side of the ledger, and typically represent decreases in assets or increases in liabilities. For example, if a merchant buys goods on credit, the transaction would be recorded as a debit to the inventory account, an increase in assets, and a credit to the accounts payable and increase in liabilities. This method ensures that assets always equal liabilities plus equity, providing a clear financial picture of the business. Impact of double entry bookkeeping. Double entry bookkeeping had several profound impacts on the economy. Accuracy and transparency. By requiring that every transaction be balanced, the system provided a more accurate representation of a business's financial position. This reduced errors and fraud, improving trust in financial records. Accountability. Merchants and bankers could easily track profits and losses, making them more accountable to investors and clients. This allowed businesses to grow and take on larger, more complex ventures. Expansion of capitalism. Double entry bookkeeping laid the foundation for the rise of capitalism. By enabling more efficient management of capital, businesses could track investments, expenses, and profits more precisely, allowing them to expand operations and increase profitability. Scalability. As businesses grew larger and trade routes extended globally, double entry bookkeeping provided the necessary structure for managing increasingly complex transactions and inventories. The system also standardized accounting practices across Europe, making it easier for merchants and bankers from different regions to engage in commerce. This standardization facilitated the growth of international trade and helped create a more interconnected global economy. 4. The role of banking and bookkeeping in the age of mercantilism. The rise of banking and double entry bookkeeping during the Renaissance set the stage for the economic philosophy of mercantilism, which dominated European economic thought in the 16th and 17th centuries. Mercantilism emphasized the accumulation of wealth, particularly gold and silver, through a favorable balance of trade, where exports exceeded imports. Banks played a crucial role in supporting the mercantilist policies of European states. By providing loans to governments, financing wars and facilitating international trade. For example, colonial expansion banks financed voyages of exploration and colonization, enabling European nations to establish colonies in the Americas, Africa, and Asia. These colonies provided raw materials and precious metals that fueled the mercantilist economies of Europe. State debt. Mercantilist states often relied on loans from banks to finance military campaigns and build navies to protect their trade routes. The Fuggers and Medicis were key lenders to European monarchs, helping them fund wars and territorial expansion. Trade and investment. Double entry. Bookkeeping allowed merchants to manage their trade operations more efficiently, track their profits and losses, and reinvest in new ventures. This helped support the growing global trade networks that were central to mercantilist economies. 5. Long-term impact of banking and bookkeeping innovations. The rise of banking and the invention of double entry bookkeeping during the Renaissance had long-lasting effects on the global economy, many of which are still felt today. Modern banking systems. The banking practices developed during the Renaissance, such as deposit-taking, lending, and the use of credit, became the foundation for modern commercial and investment banking. Renaissance banks pioneered financial practices that continue to underpin today's global financial system. Accountancy profession. Double entry bookkeeping laid the groundwork for the modern accounting profession. Today, accountants use advanced versions of the same principles developed in the Renaissance to manage the financial records of businesses, governments, and individuals.